Hey Leo, thanks for joining. How's everything? Hey guys, thanks for joining.
Thanks to you for your time. Everything is fine. How about you?
Me too, I'm all good.
Hi, bro.
Hey Leo, how are you? How are you, Nico?
Yes, sir. How are you? A long time ago.
Yes, you haven't been active for a long time. What happened with you?
I was not too active, but I'm here on the secret.
How is your Signal group going, Nico?
Yeah, no. For at the moment, I have 100%. No, I have no just one break even. No lost.
Nice, very nice. Nice job.
I took the euro, but very, very low. I don't use the optimal trend entry because I think you based your daily cycle entry, but I didn't took because it is SMC trap. So I didn't take. I take very lower, very, very lower on the sell on the SMT with. Yes, I took on the low of the London low. Sorry, of the London low today.
Yeah, you could take it lower. Like, I don't know, you might have here a couple of candles, this supply demand area, but you know, the thing is, like, I never, to be honest, I never take anything below the 62 because, you know, I had a lot of mistakes. Like, I wanted to take trades below and I missed it a lot of times. And, I found it better to take it from the 62. I rather get the smaller risk reward, but, like getting the trade. Because a lot of times I was missing trades, so I figured out that I will take the 62 instead of trying to get the big risk reward every single time. But you have to see what works for you. If for you it works to take the trade much below, it's perfect. So you gotta do what works for you the best.
Yeah, because I took just 3 pips. 2.5 pips stop loss. It was very, very tight stop loss. That's why I know the trap about the inducement. So so I didn't do this. But it was good. It was good for surf. It was good entry, like 1-4, 1-3 risk reward, 1-2. Yeah, it's good. Definitely.
What was your setup actually? Can you show your setup?
Oh, I don't. My screen is off. I am on my phone, but it's. I can show you. I can show you because my setup is just based on the of the law of the law of the London because for I didn't took the entry your entry because the for me the it was the SMC trap because the order block was mitigate and I think the price want to go lower. Yeah. I think that's the trap. Yeah, I think that's the trap. It look like the trap, because a lot of SMC traders, smart money concept trader, want to take that because they say, "Oh, this POI is it's a body POI because it create a big expansion and but no, the price want to go back on the London low because we have some liquidity." That's why I'm thinking on my head.
Yeah, it absolutely makes sense. It absolutely makes sense, to be honest. So yeah,
it makes sense because the forex, the institutional, the markets makers say, okay, they know we have, they know a lot of traders want to be here because they create perhaps trend line, and they said let's go, and they go lower and sweep all the liquidity and explode. So that's for my idea. But
yeah,
it was not easy, but I took so this.
Yeah, you're right. It was a SMT trap, but I wasn't looking at it like this way but it was super correct. So that's why accumulated, it dropped down. Yes,
Yeah.
so you are correct about this, to be honest. But like it was a terrible entry, to be honest, because it was just chopping around. It almost
Yeah,
touched.
I saw.
In the end, it went into the profit because it was the daily cycle. So if you check, we have the Asia range.
Yeah, exactly. Exactly. It's based on the daily cycle. If you take the consolidation, the expansion, and create an expansion, create the 0.62%. So yeah, it's completely good.
But I'm still expecting it to push higher, to be honest, even though if I zoom in here actually, but you know what, let me show you like on a different provider. Like we had these equal lows, so that's why I started like closing like almost my full position, and it was like 0.25% at risk, because I seen like liquidity below. Let me show you that. So this is what was my concern, to be honest. So these lows there, I found it like it's possible to take out the liquidity. So that's what I was thinking. But in the end, it went higher, but it was kind of shitty day.
Yeah, lots of people told me that thinking sweep the equal lows and explode after. And I said not, because if you're gonna 1 minute time frame, it's perfect entry. But it's for me, I think we have POI, perfect POI, matching perfectly on the
Which one?
on the low.
This?
The low, the low. Yes, that's the little POI, the little one.
The thing is, I'm not really looking at it this way. So, in hindsight, I can also like say that this was the PR, but in real time, I'm not really looking at it this way. But yeah, you could say that. So, and this
And
was
no,
also
and create no BOS, create just an inducement, and the price coming sweep and explode after. Boom.
Yeah, also like the no break of structure entry. So, it comes down.
Yeah.
So it was exactly that. But in hindsight, you're absolutely correct. We had this candle. We also had here the fair value gap.
Fair value gap, exactly.
Yeah, so it also makes it higher probability. But yeah, your analysis was correct. You're
And
pretty good trader.
for me, my ID for on Wednesday, for my ID for tomorrow, I think the price push higher on the because we have consolidation on the Asian session, and push higher, and we have some and mitigate a POI around 20 pips on a higher of the high of the day, create a new high of the day. And I think the price want to push on the London, create inducement, and after going down, and after New York pushing higher. I don't know if you see the POI. I think on 5 minutes, 15 minutes, you have POI on 15 minutes or 5 minutes. Yeah, exactly here. We have some POI. So I think the price want to consolidate, pushing higher on the London, inducement, and dropping, and pushing higher after New York.
It's also possible because also if you check the DXY, let me check that. See, it just
because the DXY didn't swept the Asian low. That's why sometimes it swept, and after it coming higher, the previous Asian low. All the time it's a previous high in the day. All the time it's swept Asian low, London high, etc. That's all the time. The liquidity is all the time the same.
Yeah, I'm thinking similar. But
that's all I trade actually. But for people, that's all I trade actually. But it's your ID. It's very good too.
Are you still using the standard deviations?
Yeah, sure. I'm using sometimes. Yeah, I'm using sometimes. It's working. Yeah, it's working. All works. All works. It's just adapt.
You what?
Just all concepts works. It's not just to adapt on what you see on your brains and your eyes, and adapt your skill on the charts. But all concepts, I think, works. Standard deviation, ICT concept, all works. But you must to adapt to what concept. Like the supply and demand works, but that's all you adapt of what the markets give you. That's, I think, the why a lot of traders fail, because they're overthinking. But we have just simple concept like the daily cycle, the standard deviation, the liquidity investment theorem, all of things, all of that.
Yeah, you're absolutely correct. As long as you have something that's systematic and is working, then you're doing the right thing. So it doesn't matter really what strategy you're using. As long as it's systematic, it's a systematic approach to the market, and it repeats with a high probability. Then it's obviously good. So you can use anything, to be honest. But so yeah, you have a good point. You have a good point, definitely, Nico. Right. Well, thanks for sharing that, Nico. I see you're a really good trader, so I do respect everything you say, to be honest. So I also see a couple of things from you that I'm not using myself. So I also a lot of times learn from you. I'm also a student of the game forever. All right, guys. Well, thanks for sharing that, Nico. I think we could spend a little bit of time to discuss what I still expect, because what you said, Nico, is absolutely correct. Like, we also have this candle here, so the market is possible to push to this candle. And what happens after that, who knows? Maybe it drops down, takes this liquidity, the lyrical lows. But if it pushes higher, then I would see this original consolidation taken out, and it's also possible to take it out with a 20 pips sweep. So that would be like the completion of the market maker buy model. Because if you also check, we also got this high and this high. See that? So we also got the equal highs. So it's likely to push higher. So above what's above, nothing really interesting above what, but this is what mostly catches my eye. So we have the equal highs right here. It's also possible to sweep it by 20 pips. And override the model. So if you look at the model, what happened here? We had the consolidation here. We had an impulsive, not this sort of consolidation, a range, an impulsive again, and this was the reaccumulation. So again, the consolidation, impulse, and the reason why this was considered by me as the smart money reversal, because if you check, this was taking out this low right there. So this swing low, we have the sell stops taken out. And also, if you see the Asia range, we also took the Asia range. So that's what I consider the reversal. And after that, I wanted to expect a possible buy. Maybe tomorrow, another possible buy. We'll see what happens. But overall, it was also like the daily cycle. So the Asia range is swept. London is bullish, makes the pullback. And technically at 8:30, that's where the trade happened. So it was kind of lazy trade, to be honest, right there. So it was, what's that, 1 to 2.5. So not the biggest risk route, but again, it's basically a completed cycle again. So that's what happened today, and this is my expectation. So I want to see the market eventually trade higher, at least, even if it's not completing the full model and not trading above the original consolidation, it's super likely to fall into another low risk buy. So tomorrow maybe another daily cycle, and this candle, as Nico said, we're gonna take a look at what's happening there. If it breaks this candle and moves higher, then obviously I'm looking to take out these. So that's what I'm looking at the moment. Yeah, so this was today's trade. Somebody's chart, Leonardo chart. yeah, so basically we had also like an order block below, as Nico said. So we had also this OB. Yeah, so this was perfect trade, to be honest, but it was a little bit lazy. But something that was like rather more interesting for me was the gold, because if you check the gold, which one is it? No, that's it. Now this was the reversal, and it's kind of insane how well it worked out. Even though end of the day it did not take out this Asia high, right? So typically we want to be targeting the Asia high at the reversal, but it's like already like 1 to 12, but at this point it was like already 1 to 7, 1 to 5, 1 to 6. So that's at that point, it's not a question that you would be closing some profits. But even though it came back, at this point you might even close the full position. Who knows? But it was overall, I think, a super good trade opportunity, because I actually missed it because I was focusing too much on the Euro USD. So it was missed by me, but overall the main idea was here we had this accumulation, a strong move to the downside. I just wrote there the manipulation, and then obviously I expected higher prices the same day actually. So the impulsive happened, but we did not trade as high as I initially expected it. And this level was just the optimal trade entry level. So we had the swing low, the swing high, and we just came back to the rider optimal trade entry, and that's where the setup happened on the lower time frame. And also, if you check out this week, we also had this fairway gap rider. So we have this gap, and it was filled with this weak rider. So also we filled the fairway gap at this point, and it was pretty high probability to move higher. And on the lower time frame, obviously using the cycle, obviously this was the reversal. So you wanna see an entry at 8 o'clock looking something like that. So we have the strong move down. I think we also had like 1 standard deviation completed or something like that. So we were also like around the 1 standard deviation area at this level, and this is the exact zone and the exact level where the entry happened. And on the 5-minute, if you check, we technically just had this low, had the high, and the market came back, optimal trade entry, and obviously exploded. And it's pretty simple concept, but the times when you have to look at the reversal are the times when usually the Asia high is not swept, right? So that's when you want to look at a reversal trade instead of the continuation. And this is also a perfect example of how this setup happens in real time too. So this was the trade. If anybody has any questions about this, just let me know. And I can explain.
Bro, I have just a question about DXY. How do you use it with correlation and this stuff?
Okay, I can tell you a few words about it. So one of the things. So there is the typical and the most popular way of using a DXY, which would be, you make an analysis on it, and obviously, if you have an analysis on DXY moving into one direction, you obviously want to see the opposite on GBP USD, and also you want to see the opposite on Euro USD. So it's a negatively correlated pair. So if DXY is going up, Euro USD is going down. If DXY is going up, GBP USD is also going down. So it's a negatively correlated pair. This is one of the ways you can use it. So, like I had this analysis here, the fairway gap, the market came to the fairway gap. At that point, when the market came here to the fairway gap, 1 o'clock, see that? So 1 o'clock, that's the exact time when the high was created on Euro USD. So it did not break the high, it just created this high, the highest point right there at 1 o'clock. And you could use the DXY right here. So you could say that, all right, I will close the trade here because DXY entered into the fairway gap, and it's possible to make the reversal after the market entered into the fairway gap. And same thing. That was the highest point at 1 o'clock. See, that's 1 o'clock. That was the highest level, and it immediately started reversing after the big C entered into this fairway gap. See, 1 o'clock again. That's one of the ways you can use it. Another way you can use it is SMT, or smart money tool, or smart money technique. And SMT is technically a divergence correlation you could be using with US dollar pairs to confirm trade directions. I can explain to you what's SMT. So the main idea behind SMT is confirming if a trade direction is valid, or confirming if a trade, if the market break of structure is an actual break of structure, or it's only a liquidity sweep. And the way you could do that, sort of have to imagine that this line would be, let's say, DXY. I'm gonna do some markups. It will take a few seconds or a few minutes, so I will do it. So this is the typical and the way. Okay, let me just make this 41. Let's make the colors. So this is the typical way of you would see DXY moving, right? So let's say, if DXY is moving to the upside, you will see Euro USD moving to the downside. And typically, on the normal basis, you would also see that the highs are moving the same way. So, when DXY makes a lower low, then Euro USD makes a higher high. And, same thing, just oppositely correlated. So this is the I would say the standard way of knowing about Dixie and what it does. And you know, a lot of times we just do like analysis on Dixie. Like, you know, you do some fibs, anything, and you see something on Dixie and you want to see like this and the opposite on EuroUSD. But with SMT, it would look like the opposite. So let's say if EuroUSD is creating higher highs and higher lows, so it's bullish, and DXY is obviously must do the opposite, but at one point, at one move, it does not complete the opposite. You will see that one of the pairs, let's say EuroUSD, would start reversing the trend. And that's the level that would confirm you a trend direction change. You know, if I know this is a little bit confusing, but I can mark this up much better. So the way you want to see that, let's say DXY is moving to the upside, and you will see that EuroUSD created this at the same time while DXY is still moving to the upside. So that means to you that DXY is still trying to move to the upside, but EuroUSD and the algorithm in EuroUSD will make EuroUSD stronger and it will start pushing higher. And this would be called an SMT divergence. So this high is still moving higher, while EuroUSD, it did not create a lower low. See, so this would be the standard way, right? So if it's creating higher highs and higher lows, you want to see the same on EuroUSD. But at one point, imagine EuroUSD does not make a lower low. It rather stops there. And this will be considered the SMT divergence for you, right there. And I can show you what happened today on EuroUSD. Okay, to pull up the SMT, you will have to click this button, compare or add symbol, and click DXY. You know, you can also compare it to different pairs. It works on every pair, to be honest. I will also show those, but DXY would be the simple way of teaching this. And you have to click this one, new price scale. And you will see that obviously, as I explained it before, so if okay, so if DXY is, excuse me, if EuroUSD is moving to the downside, but DXY, so DXY should be moving to the upside, right? Because it's negatively correlated. But you know, at one point you will notice that EuroUSD does not make the lower low, it makes the higher high. And this is the same thing you see here. So, you know, if DXY is creating again the higher highs and higher lows, you want to see the opposite on EuroUSD. But at one point, it will stop making the opposite. And it's exactly here. If you look at it closely, we have DXY creating a higher high, while EuroUSD did not create a lower low. So it did not create a lower low, it rather stopped right there. So this would be considered as a SMT divergence between the two pairs. And this would signal you and confirm that EuroUSD will be moving higher and it will be creating higher prices. And at this point, as we did not create the lower low, it rather just stopped right there. This is the SMT divergence right there. So this is the same thing I used today on Euro USD. So that's what I wrote, SMT with DXY. So, I checked it. This high was still moving to the upside, but Euro USD did not create a lower low. And that can be considered as the SMT divergence right there. So I think that's a pretty good explanation about it. Any questions about it, guys?
Hi, Daniel. Yes, I have a question. Do you have any particular time frame for watching to this divergence?
It works on any time frame. It depends on what setup you are looking at. Let's say this setup was seen on the 15-minute, then obviously you're going to use it on the 15-minute. So it's I think it's pretty simple. Like if you check the two, it's obviously opposite, right? So it's creating the exact same thing, just the opposite direction. And at one point, the correlation is not moving to the opposite direction as we see here, then that will be considered as a SMT divergence. And this was on the 15-minute. It can also be seen on the 30-minute. See that? So it stopped creating the lower lows. So again, just a quick markup of it. So it was. I think I felt it a little bit difficult to explain it. So I try to mark up again the same thing. So this is DXY. Then you wanna expect the same on Euro USD, just moving the opposite direction. So this would be how the correlation would look like, right? So this is moving to the upside, this is moving to the downside, but DXY was creating a higher high. And normally, if Euro USD is still moving to the downside, we should be seeing Euro USD create another lower low, right? Because it's opposite. But Euro USD did not create another lower low. It stopped and closed at that point. So this is considered the SMT divergence. And at this point, you can expect higher prices on Euro USD right there, even though DXY created a higher high, but Euro USD did not create another lower low. So it signaled and it confirmed that the algorithm in the market wants to push the prices higher on Euro USD, even though it's correlated with DXY. Yeah, so that's the best explanation of it. And you can see it here. So let's just move to another chart again. Back to Pepperstone. You see like the same thing here. DXY still creating the higher high, but here the Euro USD did not create the lower low, right? So it did not create the lower low. It rather started moving to the upside. Because normally this is what you see. This is what you see in normal situations. You have a high here, you have a low here, you have a low here, you have a high here, you have another lower high here, you have a higher high here. See that? So it's exactly the opposite, right? So if this is creating a high, it's creating a low. If it's creating a lower low, it's creating a higher high. See? So I guess it must make sense with this explanation. But here, Euro USD should have been creating a lower low if it would be going to the downside still. But instead, Euro USD did not create a lower low. DXY created a higher high, but EURUSD did not create another lower low. It stopped at that point. So this is yeah, this is really the best explanation, I think, of SMT and how it works.
So, sorry, Daniel, is basically when DXI aligns with a pair with USD.
Yes, I would say so. So the thing is, you have to look at. So look at this, Leonardo. Here you have at this point. Look at this one. You have this here and this here. Look how everything is exactly the opposite. Here we have a high, a low. Here we have a higher high, right? Here we created a lower low. Here we created a lower high compared to that one, see that? But here we created a higher low compared to that one. So it's exactly the opposite. See, so this one is creating something like that, but this one is creating exactly the opposite. So this is normal situation and normal correlation on DXY and EURUSD. But when you have the SMT, so smart money tool, smart money technique, whatever you want to call it, you have DXY creating again higher high. And EURUSD should be creating a lower low if it's moving still to the downside. But it's not moving to the downside, it's rather created nothing, right? So it did not create a lower low, it just stopped. So this is confirming you, if you see something like that and you have the daily cycle, it's confirming you that if you have a daily cycle, you will take the trade and you trust the setup because you also have the confirmation with the SMT. So that's the way you use it. It's a confirmation tool that will confirm your direction if you have a setup. And this will work very consistently. And it will confirm you a lot of trades. If it's a liquidity sweep or if it's an actual break of structure or it's anything, it will confirm you the real direction of the market. See that? So once you have this as a confirmation tool, you can implement it in, let's say, the daily cycle as we had today. I can even bring up the picture I was sharing, and this is where I said, look at this. This is what we had. We had this high and this low. DXY created another higher high, but EURUSD did not create a higher low. Excuse me, a lower low. So this is why is there SMT right there. So this is the way you have to use it. I can even show you another chart. Just a second. It's in the Discord, I think. So it's this one. This is a pretty old chart, you know, it was the free Telegram, but I do not have the correlation here because I did not want to share this in the public Telegram back in December. But here you see the same thing. We had this high and this high, and you know, obviously DXY was moving like that. And you know, that's why I said SMT with DXY, because at this point, DXY was still creating the higher highs and higher lows, but here the market, excuse me, like the opposite, like that. But here the market went into the opposite direction, so that's why it's like the SMT with DXY. And you see the same thing here. This was today's SMT correlation or SMT divergence or whatever you want to call it. So this is the way it works.
So Daniel, like in this case, can you show the chart you was sharing?
Yes, you know what, Leonardo, let me stop this recording. I'm gonna send a new link, all right?
Okay,
Yeah, if you-
perfect.
Perfect.
So if you know if you have any other questions, just join the other link because I want to stop this recording. I want to save it, and we're gonna talk more in the other session.
Okay, perfect.